Hey everyone, John Lyons here with Baird & Warner's Lincoln Park office, and today I'm going to cover mortgage rates and how it's impacting the real estate market. Okay, I'm going to start with an update with mortgage rates, and will mortgage rates keep rising? This is a great slide, a look back from Freddie Mac's 30-year fixed rates from January of 2022 to today. And you can see this dramatic rate of change. It's over doubled in 1 year. And matter of fact, this is the fastest increase in rates in one calendar year in history. So it's really caused a lot of buyers to take a pause, ask themselves, do I really want to be buying in this market? And then sometimes it's actually priced people out of the market because it's completely changed their affordability. So it's definitely something that we're going to be monitoring going forward. And this is a great quote from Freddie Mac, chief economist, who says, the U.S. 30-year fixed rate mortgage have increased 3.83% since the end of last year. This is the biggest year-to-date increase in rates in over 50 years. So definitely dramatic. And the question is why is this happening? Well, it's happening because of inflation. And the Fed is trying to slow down the economy as fast as possible. The best metaphor I can explain it with is if you've seen the movie Maverick, where he's doing that strafing run and then pulling those 9 Gs, trying not to pass out. Well, that's what the Fed is doing with a $19 trillion economy. They're pulling up, trying not to pass out as they're slowing down the economy. And this is a great quote from Realtor.com's research. With inflation still running at a 40-year high and Fed expecting a few more rate increases to combat it, mortgage rates will experience upward pressure through the end of 2022. So it is likely that the rates will continue to rise, so don't be shocked with that. And the good news is that while rates are expected to continue to drift higher over the coming months, much of that rapid increase is likely behind us. And this is from the chief economist at First American. So that's good news. And the next question is that with all these increase in rates affecting all the businesses and the cost of money across the country, is a recession around the corner? Well, Wall Street Journal did a terrific survey on this, and now they're forecasting a 63% probability of a recession in the next 12 months. So keep that in mind. We've all seen the headlines of FedEx and Amazon and all the tech sector laying off workers. So it is likely that we will experience a recession. But keep in mind, a recession does not mean falling home prices. And out of the last 6 recessions, 4 of them had price appreciation. We all know 2008, and we're all scared of that, but it's a completely different landscape than it was in 2008. Lending standards are much higher, and then most importantly is home equity is at an all-time high in America. So unlikely that we're going to see anything like 2008. I'm not saying that there might not be depreciation, I'm just saying that it's unlikely. And the bad news is sometimes good news. In this case, if there is a recession, that means that the Fed is likely to lower the rates to re-stimulate the economy. I know it's a crazy upside down world, but if we do go into one, the probability of if we do go into a recession, the probability of them lowering rates is high. At least from the last 6 recessions, they always have done that. So what are the experts saying about home prices? And I love this quote from a chief deputy economist at Redfin. For those bearish folks eagerly awaiting a home price crash, you'll have to keep waiting. As much as demand is pulling back, supply is reducing the downward pressure on prices, at least in the short run. So what he's saying is that the inventory level, and I'll show you in Chicago, is so low that it's unlikely that there's going to be massive depreciation in prices, even though the demand has dropped. So keep that in mind. This is the forecast for the major entities that I follow: the Home Price Expectation Survey, National Association of Realtors, Mortgage Bankers Association, Freddie Mac, Fannie Mae, and Zelman. It's fairly balanced. Zelman's expecting a 5% depreciation in 2023. But keep in mind, whenever you see these headlines, real estate forecasts, or real estate in general, is like the weather. And the forecast in California, Arizona, and Florida is going to be completely different than it is in Chicago. We don't see major swings in home appreciation or depreciation like they do. So keep that in mind. I'll show you the data in Chicago shortly. The banks, however, are forecasting depreciation next year, just something to keep note of, but they are forecasting also appreciation in 2024. So if it's going down, it might go down short-lived for a year and then rebound in 2024. Okay, so what's happening in Chicago? This is the area that I'm pulling, so aggregated data. And right now, let me pull up supply. This is the metric that I'm really following closely, is at a 3 months of inventory. That is a seller's market. It is a 37% decrease from this point last year. So it's definitely keeping prices stable in the city of Chicago. So what are prices doing? They're flat. They're about 1% up from this point last year. And then market times are still very low. Average market time is 74 days. So I hope this helps. If you have any questions, please reach out. My contact information is below. Thanks for watching, guys. Happy holidays to you.